So let's talk about what happened in the first quarter. Pretty phenomenal performance. Of course, it was coming off a very sharp downturn in December. But what do you think happens now?
So I think your point is right. We have to set expectations of where we're starting from. I think you had the perfect storm in December. The combination of the market perception that the Fed was going to hike us into recession. So back in Q4, I think people were expecting 5 or 6 Fed hikes between then and 2020. You had a trade war with China that was toxic. I was on this show on December 6th. I think that was the day that the CFO of Huawei was arrested. Today, we have a PMI number out of China above 50. So a lot's changed vis-a-vis China. And as a result of the combination of the Fed and China, market sentiment was awful. The capital markets were closed. Many investment managers were de-risking or selling ahead of redemptions. As a result, the market sold off 20% in Q4. So things are usually not as good as they seem, or usually not as bad as they seem.
So what does that mean? If we overshot to the downside there, have we overshot to the upside, or are we just getting back to where we should be?
My personal opinion is we're probably back to what is a relatively fairly valued market. There was a major pivot, which can't be underestimated, which is we went from having 5 or 6 rate hikes estimated to today, I think, 1. And the rhetoric would imply maybe we cut before we raise.
Yeah,
so the 10-year was 320 going into Q4, which caused all this. Now we have a 240 10-year. S&P earnings estimates for 2020 haven't changed much. Maybe they went from 185 to 180. So the actual spread between the S&P earnings yield and the risk-free rate or the 10-year rate is pretty wide today. So it seemed to me the market's relatively fairly valued. And if you just look at a screen and went on a boat for the last 5 or 6 months, things are flat, earnings have grown, the Fed's a little more accommodative. So equities probably feel a little bit better today than they did at the end of Q3. But with that said, it's been a big run over the last 3 months.
The markets are the highest they've ever been on an April Fool's Day, right now. So things are clearly pretty good. If you come back 3 months from now, like you were here in December, and things have gone completely pear-shaped, what is it that went wrong?
It's a great question. And I think it's something either geopolitical or some unknown. I don't think it's going to be from multiple. So what's going to cause the earnings not to be, what's going to cause the earnings not to show up? What is that unknown? If nothing else shows up, I think the playbook we have is a lot of what we've had for the last several years, which is the overall economy is growing at a tepid rate. The U.S. is the best house in a bad neighborhood. But U.S. businesses deserve credit because they're driving more earnings. I mean, over the last 10 years, we've had a slow GDP recovery. Maybe it's been 2% GDP, but S&P 500 earnings have doubled. So we've had, 7% per annum S&P earnings growth plus a 2% plus dividend. Businesses deserve credit for driving productivity and driving profits. And I think a lot of it happens because, one, and no one comes on this network and celebrates America. American capital markets are the best in the world. American businesses aren't perfect. They're better today than they've ever been. There's better corporate governance. There's more accountability. And businesses are able to leverage scale to invest in technology and to drive profitability, and that's driving corporate earnings.
For activist investors, given that you just said there's more accountability and better governance, how much harder is it today to find a fat and happy company to go after?
And more competition than ever.
So if that's the narrative, it's a lot harder. But I don't think that's the narrative. I think the narrative is, and I think it's a great conversation, the narrative is shareholders are owners of companies. Sometimes companies do things you don't want them to do or could do better things. You have a voice, use your voice. So it's a very populist, almost progressive kind of movement that once it starts, it doesn't stop. And it may have started with a bunch of hedge funds or well-known activists.
But now you're hearing it from the BlackRocks of the world.
100%. So now, the biggest event to me in Q1 was Wellington coming out against Bristol Myers Celgene. So think about what that was. A very well-regarded traditional passive long only saying, I own the stock of Bristol Myers. I wish the company were sold, or I wish the company continued to invest in R&D and not buy Celgene. I can vote for this deal, right, or I can vote against it. And the reality is, they realize if they don't speak up, they go away and they get replaced by BlackRock, right? So Wellington has to justify its fee for active ownership over BlackRock. And if you own healthcare stocks and you think Bristol Myers is doing a bad deal, speak your mind. Now, I happen to be on the other side of that investment. I bought some Celgene. I wanted the deal to close. But what Wellington's doing is great for the capital markets. Now, there may be unintended consequences, right? The next CEO thinks about doing a deal, may make sure he or her has his shareholders on sides, and it may, in effect, make doing transactions harder. But in general, it used to be taboo for Wellington to speak their mind. Now they have to, and it's the only way they're going to outperform BlackRock.
Do you have a take on the IPO market? Specifically, I'm thinking about Lyft on Friday and what that may mean or not for the rest of the unicorns or decacorns that are coming?
Well, first thing is, I don't know if it's a bullish or bearish sign for overall valuations, but it clearly says markets are open. Remember in Q4, we didn't even have a high yield bond deal, right? So
and a bunch of lousy IPOs.
Yeah, so the market's much healthier. I think the most interesting thing to me, though, is all the companies that are coming public have one thing in common. They're tech businesses. So there's a huge changing makeup of what, it's a good point. So, but for the most part, tech businesses. They're a change in the makeup of what the market's going to be. So as we look forward, right, the components of the market are going to be more driven, and it makes sense, by technology.
Did you buy Lyft?
We did buy a little bit of Lyft.
How do you value Lyft? How do you value a business that's losing $1 billion and it's going to be losing $1 billion for a long time? Where in your model did you get a return on cash?
So our investing is that sometimes it's valuation and sometimes it's capital flows. Our Lyft investment was a capital flow around sort of, if you can get an allocation, IPO, and you can pick up, some.
So did you sell as well?
Yes.
So you bought and sold?
Yes.
So Keith, just overall, back to the macro. So definitely the regulatory environment is more positive in this country. Tax for businesses, tax environment definitely more positive. Wage gains at the low end you're starting to see because of the tight employment picture. I mean, the reason you have trouble answering how we're going to be down in 3 months is because it makes me nervous, but everything seems more positive right now, and we're at 16 times earnings. So I have trouble with the bear case as well.
So I disagree with what you say. I agree with what you say. And there are real winners in what you say, and there are losers, meaning a business that doesn't have pricing power, that has labor costs, that has to pass on raw materials, they may not be as well positioned.
But the consumer might be in better shape as an offset to that. We're gonna get. When I thank you, we're gonna get to Cramer, and we have been talking. At least we were. Now they just changed it. What happened to Cramer? I don't know. I was hoping we were going to get to Cramer because we're talking about people have been too negative. I mean, there have been reasons to be positive for the past couple of months just with the overall backdrop. And then we get the China news today. Maybe even that bogeyman was not as scary as we thought, right?
I think that's all correct.